Welcome to today's financial news update from quantbyte.io. Financial analysts are comparing the current trading prices of individual stocks within various exchange-traded funds, ETFs, to their projected values in a year's time. This assessment helps determine the potential future value of these ETFs as a whole. Financial Analyst Summary: ETF channel analysis reveals that the trading prices of underlying holdings are being compared to analysts' 12-month forward target prices. A weighted average implied analyst target price has been calculated for each ETF, providing a benchmark for potential future growth. Soybean prices declined due to increased trade tensions, resulting in a loss of 14 to 16 cents per bushel and a November price drop of 11.25 cents for the week. The national average cash bean price fell by 15.75 cents to $9.31. Soy meal futures also dropped by $1.60 to $2.30 on the day. The wheat complex declined across three markets due to spillover pressure from other commodities, with prices falling by 8 to 9 cents in one market and 16.75 cents for the December contract. Live cattle futures made a strong recovery, closing $2 to $3.45 higher due to cash market strength. The October contract rallied $7.45 this week and has not seen any deliveries yet, with the next delivery date remaining on track for July 31st. Cotton futures declined by 60 to 77 cents in near-buys, with December contracts losing 146 points for the week. The US dollar index fell to $98.620, down from $99.285 earlier, while crude oil prices dropped below $60 a barrel at $56.69 per barrel. The corn market declined due to outside pressure and a weak performance from related markets like beans. Prices closed lower by 4 to 5.25 cents, with the December contract down 6 cents for the week. The national cash price also dropped, falling to $3.71 3/4 per unit. Lean hog futures declined on Friday, with October contracts down $1.975 for the week. The national base hog price rose 7 cents to $96.40, according to USDA data. The CME Lean Hog Index also fell. U.S. cotton futures have declined by 55 to 64 points due to the expiration of October contracts. The U.S. dollar index has dropped to $98.760, a decrease of $0.525 from its previous value. Additionally, crude oil prices have fallen below $60 per barrel, decreasing by $2.55 per barrel. Live cattle futures declined by $0.85 to $0.95 on Friday. The October contract saw an increase of $0.72. Deliveries were not made for the second consecutive time in October. Lean hog futures have declined by 15 to 55 cents, while the national base hog price and CME Lean Hog Index also fell. The pork cutout value is lower according to the USDA's FOB plant report, indicating a drop in demand or supply chain disruption affecting the pork industry. The wheat complex is experiencing a decline, with all three markets posting losses. Soft red wheat futures on the CBT are down 7 to 9 cents, while Kansas City HRW futures have fallen by 6 to 7 cents. Preliminary open interest has increased by 10,762 contracts. Spring wheat MPLS prices also declined. Cocoa prices fell sharply, with December ICE New York cocoa closing at a 20-month low due to ongoing market pressure. The price decline was 1.63% for New York cocoa and 1.67% for London cocoa. This extends the weak slump in cocoa prices. Sugar prices declined last Friday, with New York sugar hitting a 2.5-week low. The New York March contract closed down 0.16%, 0.98%, while the December London ICE white sugar contract dropped 0.16%, 0.70%. This downward trend is attributed to weakness in crude oil and the Brazilian real currency. Arabica coffee futures closed 4.20 cents lower on Friday, marking a one-week low. Robusta coffee also declined, closing 88 cents lower. The downward trend continues, following forecasts of increased rainfall that may lead to higher crop yields and lower prices. Stay informed with quantbyte.io for the latest financial news.